All right, everyone, get ready because today we're taking a deep dive into something that sounds a little intimidating, market inefficiencies.
Oh,
Yeah.
market inefficiencies. Sounds like we're about to get really technical.
Maybe a little, but before anyone tunes out thinking this is just for Wall Street, I promise this is relevant to everyone listening.
Really? How so?
Because understanding these so-called inefficiencies is kind of like learning how to spot those hidden gems everyone else misses.
Okay. I like where you're going with this.
Right. It can apply to anything from finding an unbelievably cheap flight to seeing an opportunity at work that everyone else is overlooking.
I am intrigued. Tell me more.
Well, it just so happens that you sent over this really interesting excerpt called Exploiting Market Inefficiencies, a trader's guide, which, by the way, makes me think you're already way ahead of the curve on
Uh,
this.
Well, I try to keep my finger on the pulse.
Clearly. But this excerpt seems to completely blow up this idea that markets are always perfectly efficient, right?
It really does. You hit the nail on the head.
So what's the real story here?
This excerpt dives right into how markets actually work and challenges that traditional view that everything is always perfectly priced and completely fair.
Okay, so you're telling me it's not.
Nope. The excerpt suggests that prices don't always reflect the true value of something.
And that's where things get interesting.
Exactly.
So we're talking about those times when something is priced either way higher or way lower than it should be.
Yes, precisely.
Like what if I said I found a first edition Hemingway at a garage sale for $5?
Someone missed out big time. That's a classic example of what we're talking about. The perceived value and the actual value were miles apart.
The excerpt calls these market inefficiencies, right?
Yes, it does.
So they're essentially mispricings moments when something is being offered at a price that makes no sense given how much it's actually worth.
You got it.
Okay, so we've got these inefficiencies, these pricing slip-ups, but they don't just pop out of thin air, right? What actually causes them?
Now, that is the million-dollar question.
Don't keep me in suspense.
Okay. So the excerpt breaks down these inefficiencies into three main categories: information gaps, human behavior, and problems with the structure of the market itself.
Let's start with information gaps because I feel like those happen all the time.
They do. And they're more common than you might think.
Okay, so give me an example. Like insider trading, that's an information gap, right?
Well, not exactly.
Okay, then what?
Think of it more like when a company releases an amazing earnings report, but the news takes a while to spread and really sink into the market.
Okay,
For a short time, the stock price might not fully reflect the good news.
interesting.
That gap, that lag between the information coming out and people reacting to it, that can create an inefficiency.
So it's like a race against time to process the information and act on it before everyone else catches on.
Exactly. Now imagine that on a larger scale with mountains of information constantly flooding the market.
Yeah, that's a lot to keep track of.
It's like a breeding ground for inefficiencies.
Wow. Okay, so we've got information moving at warp speed, but what about us humans in all this?
What about us?
We're not exactly known for being perfectly rational,
Yeah.
right? Especially when it comes to money. You're preaching to the choir there.
Right.
We're emotional creatures. We make bad decisions all the time, and our brains basically short circuit when money's involved,
It's true. We're all a little irrational.
to say the least.
And when you add that human element to the already complex world of markets, things get even more unpredictable.
That's putting it mildly.
Think about market bubbles for a second.
Okay.
Remember the dot-com boom back in the day when it seemed like everyone was throwing their money at any company with .com in their name?
Oh, yeah, good times.
Or even more recently, all the hype around those meme stocks.
Right.
Prices were going through the roof based on nothing but pure hype speculation and people's fear of missing out.
It was like a feeding frenzy.
It really was. And when those bubbles inevitably burst, well, that's another example of those market inefficiencies we've been talking about playing out in a big way.
So it's like a wild roller coaster ride, but instead of gravity, it's our emotions driving us up and down.
It's a pretty accurate analogy.
And just to make things even more interesting, we've also got these structural inefficiencies to factor in those quirks baked into the system itself.
Yes, the structural inefficiencies.
So we're talking about regulations, trading rules, all those things that can create opportunities for someone who knows how to work the system.
Exactly. Those are the things that can really throw a wrench in the works.
Okay, so it's not just about information gaps or crazy human behavior. It's the actual systems themselves that can create inefficiencies.
It's all connected.
But this is blowing my mind.
Let me give you an example.
Okay,
Imagine a company's stock is traded on different exchanges around the world.
okay, makes sense.
Now, because of things like time zones, currency fluctuations, even just the speed of information traveling across the globe. You might find moments when that same stock is priced slightly differently on those different exchanges.
Wait, so you're saying there could be a window where someone could buy low in one place and sell high in another? Is that even allowed?
It is. That's the beauty of arbitrage.
Arbitrage, there's that word again?
It's all about exploiting those temporary price differences before they vanish.
So you have to be really fast.
You do, and you need sophisticated technology to even have a chance.
Sounds like you need to be a bit of a Wall Street hotshot to pull that off, right?
Well, there are definitely levels to this game.
Like what?
High-frequency trading, for example, uses algorithms to make thousands or even millions of trades per second to take advantage of those tiny price differences.
Okay, yeah, that is way above my pay grade.
Mine too.
So what about those of us who aren't Wall Street wizards? Is there any chance for us regular folks to spot and maybe even profit from these
Of
inefficiencies?
course.
Really, because it kind of feels like we're destined to just get swept along with the current.
Not at all. Remember, not all inefficiencies are created equal.
Sure.
Some, like those split-second arbitrage opportunities we talked about,
Yeah.
they require serious speed and fancy tools.
Right.
But others are more about recognizing patterns and being a little more in tune with what's happening in the market.
Okay, so you're saying it's possible for anyone to learn this stuff?
Absolutely.
I'm ready to channel my inner market guru, so what are some of the key things I should be looking for?
Well, the excerpt actually lays out some practical strategies,
Hmm.
and it all starts with becoming a bit of a market detective.
A market detective, I like it.
The first clue, price patterns.
Price patterns. So you're saying I need to spend all day staring at charts, trying to decipher those squiggly lines, because honestly, that just gives me a headache.
I hear you. It can be overwhelming, but it doesn't have to be about memorizing every single chart pattern under the sun.
Okay, so what should we be looking for?
It's more about training your eye to spot the outliers, those movements that just don't seem to make sense.
Give me an example.
Sure. Let's say a company's stock price suddenly tanks, even though they just announced record profits.
Okay, that does seem a little fishy.
Right. Now, there might be a perfectly good explanation for it, but it could also be a sign that something else is going on behind the scenes.
Intriguing. Okay, so we're on the lookout for those price anomalies, those head-scratching moments.
Wow.
What else should our market detective kit include?
The next tool is all about understanding market sentiment.
Market sentiment, so like the mood or the vibe of the market?
Precisely.
How do you even measure something like that?
You have to look at things like investor surveys, news headlines, social media chatter, even just the overall tone of the conversations happening in the financial world.
So you're saying if everyone's feeling super optimistic, it could actually be a sign that things are about to take a turn?
It's possible, remember, markets are driven by human beings, and our emotions can sometimes create these self-fulfilling prophecies.
Okay, yeah, that makes sense. Like if everyone's convinced the market's about to crash, they all start selling, and then boom, it becomes a self-fulfilling prophecy.
Exactly, and those waves of extreme sentiment, whether it's euphoria or panic, they can often create opportunities for savvy investors to spot those mispricings.
Yeah. So you're saying the key is to stay calm when everyone else is losing their minds.
Easier said than done, but yeah, essentially.
All right, so we're watching price patterns, keeping our fingers on the pulse of market sentiment. What other tricks do we have up our sleeves to uncover these hidden market gems? It feels like we're just scratching the surface here, like we need a secret decoder ring to understand the market.
Well, there are definitely some tools of the trade, and the next one is called technical analysis.
Okay, technical analysis, that's where all those charts and graphs come in, right? To be honest with you, they still kind of freak me out.
I get it. It can seem like a foreign language.
Hmm.
But think of it this way. Those charts are just a way to visualize all that market data we've been talking about.
Okay.
They can help you spot trends and patterns that might not be obvious if you're just looking at a spreadsheet full of numbers.
So it's like using a magnifying glass to search for clues.
Exactly. And one of the things technical analysis can help you see is whether a stock or other asset is overbought or oversold.
And that means?
It means the price has moved too far too fast and might be due for a correction.
So basically, it's a way to spot those moments when the market's getting a little ahead of itself.
I got it.
Okay, we've got price patterns, market sentiment, technical analysis. It's like we're assembling our own market detective toolkit here.
And every good detective needs one more thing.
What's that?
They need to be able to leverage news and events. And I'm not just talking about reading headlines here.
So what do you mean?
It's about being able to look beyond the immediate news and understand the ripple effects, those second and third order consequences of what's happening in the world.
Okay, so give me an example.
Let's say there's a major drought in a certain part of the world. Now, obviously, that's bad news for farmers in that region.
Right.
But what about the companies that supply those farmers with equipment or fertilizer, or the food companies that rely on those crops?
Okay, I see what you're saying.
It's about connecting the dots and understanding how seemingly unrelated events can cascade through the market.
And those who can put the pieces together the fastest have a serious advantage.
Exactly.
Wow, this is making my head spin. But let's say we've put in the work, we've used all our new detective skills, and we
Hmm.
think we found a genuine market inefficiency, a real opportunity. What do we do then?
That's the million-dollar question, isn't it? And the answer is it depends.
On what?
It depends on your risk tolerance, your investment goals, what kind of inefficiency you're dealing with, whole bunch of factors.
So walk me through it. Give me an example. Let's say I'm feeling brave and I want to try my hand at this whole exploiting market inefficiencies thing. What are my options?
Well, one approach is to look for what we call arbitrage opportunities, where you're essentially profiting from a price difference between two similar assets.
Like we talked about earlier with the stock being priced differently on different exchanges.
Exactly.
Yeah.
Or you could focus on something called event-driven trading.
What's that?
It's where you're trying to anticipate how the market will react to a specific event,
Uh,
like a company merger or a big product announcement.
so it's all about timing. Buying low right before the news hits and then selling high when everyone else catches on.
In a nutshell.
Yeah.
But it's not as easy as it sounds. Timing the market perfectly is incredibly difficult even for seasoned professionals. The key is to manage your risk and never invest more than you can afford to lose.
That's good advice for pretty much everything in life, isn't it?
You got that right.
Well, this has been an incredible deep dive. We've gone from debunking the myth of perfect markets to uncovering these hidden inefficiencies and all the opportunities they create. It's like you said at the beginning, this isn't just about Wall Street, it's about understanding how markets really work at their core.
I couldn't have said it better myself.
And the more we understand these dynamics, the better equipped we are to make smarter decisions in all aspects of our lives.
Absolutely. Whether we're talking about investing, negotiating a better price on a car, or even just understanding why certain products seem so overpriced.
It's all connected. This deep dive has definitely given me a whole new perspective. And you know what I find particularly fascinating? I keep thinking about the role technology plays in all of this. We barely even scratched the surface of how algorithms and artificial intelligence are changing the game when it comes to spotting and exploiting these inefficiencies. Makes you wonder what the future holds.
It really does. It's a fascinating time to be following the markets. That's for sure.
It certainly is. Well, this has been an incredible conversation. Thanks for taking us down the rabbit hole of market inefficiencies.
Anytime. Always happy to talk markets.
And for everyone listening, keep those detective hats on. And remember, the market is full of hidden gems if you know where to look. Until next time.